Hello, everyone. My name is Glenn Moore, and I'm an advisor with Gordon Asset Management. One of the things we wanted to talk about today is inflation, which has been a hot topic in the financial media and something that you've probably seen when you're shopping at the grocery store, and you've probably noticed it with the price of housing. What we wanted to do is try and tie that back to how you can invest on the plan menu in your 401k to try and position around inflation. When you have inflation, generally what that does is, you see the price of commodities and inputs going up. And so when you think about that, you think about energy and you think about industrial materials. But B, also generally interest rates are going up. And so when interest rates are going up, financial companies do well. And it's not only the large financial companies like Goldman Sachs and Morgan Stanley and Citibank. Regional banks also can do extremely well in this environment. And that's because not only are interest rates going up, but the shape of the curve is steepening too. And that's when financial companies tend to do really well. Some different asset classes that you can invest in that are on your plan menu would be large cap value, mid cap value, small cap value. Generally, these different funds are going to be overweight or have exposure to financial companies and energy companies and even industrial companies, which generally are considered value in nature. So some companies or asset classes that you may want to avoid or underweight in your portfolios would be the growth counterparts, and mainly in the small cap growth area. The reason why is when you have high inflation and you have high interest rates, the market generally tends to look unfavorably on these companies, especially if they have high debt levels, because that debt would have to be refinanced at a higher rate, presumably, which would eat into their bottom line. And so empirically, we've seen that this year where small cap value and the small cap value ETF is up over 20% this year. And you look at the growth counterpart on the small cap side, and it's up only 4 to 5% this year. And mainly that's been because you've had financial companies and regional banks, which have a fairly large weighting in the small cap value index, really outperform the growth counterparts this year. And so these are some of the ways that we're helping our clients to invest around an inflationary environment. And if you'd like to talk to us about how we could help you and how we could work with you to position your portfolio to mitigate some of these different economic environments, we'd be happy to do so. Have a great day.